tariff, it's still more economical to buy from the American factories. And people say
Well,
that can't possibly be true, except they manufacture more homes in a month than our factories make in a year. And so they truly have the efficiencies of scale. They do have the purchasing power. Now, as tariffs show up in America, those numbers may in fact change. But today, it's still economically viable to purchase from the Americans versus buying at home.
are these homes are all approved by Ontario building codes or Canadian building codes?
Yes. So if people want to Google, they can look at CSA A277, which is a code that indicates it's built to the Ontario Building Code. Now, CSA A277 will say, is it a zone 1 for Southern Ontario? Is it a zone 2 for the middle of Ontario? Or is it a zone 3, which is Northern Ontario and Arctic?
Excellent. All right. Well, keep us updated and see how the cookie crumbles. All right.
It is
Well,
what it is.
that's what it is. You got to deal with it. All right. Welcome, everybody. We're going to be talking about a bunch of things tonight. One of the focus will be tonight about a lot of defaults happening across Canada. A lot of properties are going under power sale, defaults, and so on. And we have all different experts here tonight to share their wisdom with you. So we're going to keep rolling. One thing I don't understand so far, last 3 days, we had a bloodbath on the stock market. And stock market only promotes, especially Warren Buffett, he says buy low, sell high. We all do that. And what's happening when it comes to Canadian real estate? Do you want to buy low? This is the perfect time. Talk to Randy Goodman. And if you want to buy high, buy to the boom time. This is where people have lost a lot of money. I recently got a call. Gentleman bought a piece of property on Bathurst Street for 725, and now is appraising for 450. Yike. One bedroom condo. So this is the story all along. But again, the scariest part is to be, hey, buy it when everything is low. And this will be the perfect time if you happen to be a professional real estate investor. Just the best advice ever you can get from all of our experts here tonight. So let's talk about Canadian Goose and Bald Eagle. So who is what? And we know this drama continues. Uh, this is gonna be continue until we have elections are over. I believe Mark Carney is implementing something tonight after midnight, and let's see how this thing go. Even though Canada and U.S. been the best friends, and when it comes to money and tariffs, that's a different ballgame altogether. So let's see how this thing plays. I'm sure most of you have heard so much out of it. That's not funny. So Canada lost 33,000 jobs in March 2025. And this is one of the worst one ever. Unemployment rate is a little bit up, and we're going to lose a lot more jobs. That's very unfortunate. Every time we lose one job, it has a ripple effect. It affects about 12 families. Anytime if one family, one person loses a job, it affects all of the families, by the way. That's the unfortunate part of it. So Toronto housing market, what is happening with this one? Whoa, whoa, whoa. Well, the sales have gone down, and Randy Goodman is going to be walking us through what is happening. If the prices are up, prices are stuck. But again, this is buyer's market. If you're a buyer, this is the best market ever. And again, it may not come around for a while, though. Let's see what happens. But this is a window of opportunities, in my opinion. Randy Goodman is going to walk us through exactly. And how many vacant homes in GTA? 120,000. Whoa. A lot of houses for sale. And this is what's happening in the market. And Randy will walk you through 65% of people who are buying these properties are buying below asking price. Above asking price, only 31%. These are the most attractive properties in Toronto, and people are buying at 4% at asking price. So this is more or less a bit of a pulse. And here is the scenario. How many properties are in default in Canada? Well, here's a figure from Canadian Banker Association, and this figure is a bit outdated because this is as of January 31st, 2025, and the Canadian Banker Association delivered these things every 4 months or so on. You can get information from Canadian Banker Association, CBA.ca, by the way. But on the other hand, things are a little different when we look at it. Here is another scenario, another challenge in Edmonton. Well, there is a landlord and tenant board there, but it's different. And one of the company called ARH Holdings bought this building and they increased the rent by 200%. We can't do that in Ontario or some other provinces, by the way. But again, their justification is they want to restore and preserve the building. So this will be quite expensive, and this is how their clarification is. By the way, this is gonna be in the media for a while, and we're gonna see how does it work. But Alberta rental laws are totally different than Canada. It is Canada, Toronto. A lot of bank sales, power sales. Right now, as we speak, there are approximately 563 properties. This is, I would say, the highest so far compared for last 2 years or so, since 2023, just thought a figure. And again, some of the information you will find. If you're looking for a property like this, talk to Randy Goodman or one of your realtor. How about US? 6.1 million people are in arrears. These are all commercial properties, by the way. 6.1 million. That's a humongous, by the way. And again, opportunity exists on both sides of the border. In case you wanna, if you are investing in US, those who want to learn about high income skills, we have training, flipping for profit RCA. Check it out, though. A lot of people are leaving Canada. They're going to go there. There is going to be an auction, 83 properties. Where are they? Well, I'm going to be giving information that about 83 properties are going to go under auction in Calgary. Even though Calgary is hot, and these Canadians owners, Calgarian homeowners, did not pay the property taxes. This is something but Vancouver market is kind of decreased. Again, it is reflecting more or less Toronto, Vancouver, Montreal, Calgary are the more or less, I would say, the main cities, which will give you impulse of, hey, what's happening in the real estate. But again, the prices are still kind of holding. But as long as sales are concerned, they are down. By the way, you can share this information if you'd like to have information on it. Condo developers. Now, this is a big thing happening in Vancouver and Toronto. Prices have dropped, the demand have dropped, and there are a lot of condos, a lot of default, a lot of breach of contracts, and people who are not able to close the deal, failing the lawsuit. And this is going to keeping the lawyers busy. It's not good for anybody, including the builders or the buyers or the realtors. As a matter of fact, some of the realtors have to pay back the commission back to the builder. Whoa. So there are going to be a lot of financial losses here, but also there's a good opportunity as long as if the condo can have positive cash flow. By the way, the small condos don't do any cash flow. Two bedrooms can have a bit of positive cash flow depending upon the location. Landlords are in trouble because they do not learn how to become a landlord, how to vet good tenants, and what the procedures are. So this is a lot of trouble. A lot of speculators got into business or real estate, hoping to make a quick buck in and out, just like stock market. And some of them are stuck, not realizing it. It's a different program. You don't buy $1 million business and knowing nothing about the landlord tenant tech. You get into the business though. But again, we learn. This is about interest rate. April 16th, David Gross David Grossman going to be enlightening us what is happening on April 16th. If the interest rates are dropping or what? Again, I do believe the interest rate may gonna drop subject to how this political thing happens and what happened with the tariffs though. So this is the sad part of it. The house prices have gone dramatically higher compared to the salaries of an average Canadian. So that's why affordability becomes a main, I believe, one of the main reason all the political parties, all the leaders are banking on it. and saying, hey, listen, come and get it from us and whatever, be aware of it. Canadians, they don't have much of the money left, by the way. No emergency fund, no investment capital, nothing to set aside. But again, if you start at least saving 10,000, at least you can start with something. Here is one of the biggest news we ever had. There were 30,000 hits on one of my Facebook, uh, 30,000 people looked at it. A luxury home in Vaughan got sold for 11.38 million, April 2021, got sold in power sale or foreclosure of 8 million. Then it got resold again under power sale for 6.55, lost about $5.2 million. The question is, it's a fairly big house. And this more or less gives a bit of an idea when the market cools down, when become the buyer's market. Okay, if professional, hey, you know what to do. But this one is have I don't know what it is. This one, it seems like people lost half of the money. Property came into about half of its value. Here are a bunch of other houses sold, and if you notice that average houses lost over 400,000, small house in Whitby sold for 200,000 loss. Now these losses are from the purchase price and sale price. Forget about all the legal fees, land transfer taxes, and all other expenses. So again, you can add up 10 to 15% more, and plus mortgage penalties and whatever. And it's not very, very pretty, by the way, as we speak. But at the same time, it offers a lot of opportunities for all of us. Cash flow Alberta, this thing is, again, people jumped into Alberta hoping there'll be cash flow. Rents are tanking there. Rents are tanking all across Canada. A lot more rents available, by the way, than people are looking for rent. Here's another one, 250,000 deposit on this condo by Menkes, 771 Young Bloor, one bedroom, 433 square feet, original purchase price 900,000. Now they're asking for 685, and the buyer decided to take a walk, leaving $250,000 of his own capital. Right, no buyer, can't find it. Occupancy is this year. Arrears are jumping quite a bit across Canada, by the way. There are several different sources one can get information from, whether it is from the credit bureaus or whether from the Canadian Bankers Association. These are the two great sources to get more information in case you want to get one. Though. Tariffs could raise the prices in the U.S., but here we go. Canada provide lumber, provide steel, aluminum. Aluminum come mostly from Quebec. Mexico provide us more or less the drywall, and China sent us a bunch of appliances, and it's going to reflect the house prices in U.S. for future to come, unless otherwise they reach some sort of an agreement. Home prices, if you look at it very carefully from last 2010, they have done well. They go up and down. If you look at the chart from 1969 onward, average house price have gone up by 8% compounded. That's a pretty good number, though. So this is what Calgary 82 properties going to be sold on April 24th. Today is only 8th. You have 16 more days to look into it and check it out in case you want to check it out. The housing is not doing well in Canada, by the way. We are not building enough houses. Unfortunately, the red tape, the cost, these are phenomenal costs. Only their building is single family homes, more or less than condos now. Banks, this is every time when market slows down, people intend to live on the credit card, but they don't realize the cost of it. If you borrow $8,000 credit card and you start making minimum payment, you're going to be paying about over $5,000 interest payment. Just thought I should let you know. Okay, what is happening with short-term rate cuts? Possible, yes. We will talk. Interest rates. Why Japan is keeping so low interest rate? European is 4.5, Canada is 3%, Russia and US look at the rate compared to Turkey, by the way. So having said all that, we're going to bring first our guest speaker, David Grossman, going to be joining us soon. David, are you here yet? David Grossman. Okay, he's not here yet. So we're going to bring over my sister. She is the worst.
Oh, he said sorry, Navtash, he said he needs to be upgraded to panelist. He just texted.
Okay, fine. I'll do that right now. Sure. Thank you. Uh, just give me 1 second, please. David Grossman. David, are you there?
Hello there. Hello.
Hello, sir. How do you do?
Good. Thank you very much for upgrading me to panelist. Randy,
All right.
thanks for catching that. Good to be here.
All right. So what is going to happen on April 16th? Are the rates going to go down?
Okay, so there is a 2/3 chance that rates are going to come down another 25 basis points, and there's a 1/3 chance that there's no change. So, do you want me to talk in general what's happening
Yes,
with
please.
rates?
Yes, please.
All right. So the expectation is rates move. The leading indicator for where rates are going is the 4-year swaps. Don't ask me exactly what those are, but that's a key measure, the 4-year swaps. And based on that, it's expected that prime rate is going to come down by another half a point this year, and that it'll probably stay down for another couple of years. Okay, so we've got 2 or 3 years of prime rate, slightly slightly lower. Okay, now that's the forecast, but anything goes. There's so much uncertainty now with respect to these tariffs. There's concerns that that tariffs can cause inflation, which could impact how the Bank of Canada handles the policy regarding the rates. And part of that concern, I was just having dinner with my brother-in-law, who's a jeweler, and he was saying that he sells these little gold pieces. I guess they're the butterfly things that go on the back of women's earrings. And, they didn't even know it, but the company who provides those is an American company, and they just do a really good job at it. And all of a sudden, the price on those went from around $75 to $150. It doubles
Whoa.
because, well, right, exactly. So why? Inflate the tariff's supposed to be 25%. So why does the price double? Well, with an expectation of inflation, it can have it can be self-fulfilling just from the expectation. And then, people, they're always looking for a way to take advantage if they can, make some extra money if they can. So they say, "Oh, well, you know what? Fewer people are going to buy this product now. So therefore, to cover our shipping costs, we have to charge more." So, so much instability can result from instability in and of itself. So, it's really anybody's guess. And Navtaj, you wrote originally, should people lock in? Is now the time to lock in? And I'd say there's a good case for locking in for 3 years or 5 years if you can get a rate under 4%, which you often can nowadays, whether the mortgage is insured. It definitely helps if it's insured. You can get a mortgage for under 4%. The variable rate is still, let's say, around prime minus 80. Prime right now is 4.95. So if you can get prime minus 40, prime minus 80, you're paying, like in the low fours. So it's slightly worse than a locking in, except that there is an expectation that prime will come down by another 0.5%. So if it does come down another 0.5%, then you're good with the variable rate. But if you can lock in for under 4 years, for under 4%, I would do that, certainly. And now is a good time to get a rate hold. So if you're thinking about buying a property, you can get pre-approved. You can get a rate hold in place. It's good for 120 days, and it's there for you just in case rates do go up. So good timing, good opportunities, I think, right now, because the market does seem to be a little slow. And I'm here for all of your needs. Are there any specific questions about rates or anything else?
Those who got any questions, can you please put in the chat or Q&A? David Grossman will be happy to answer it for you. David has been in the business for more than 20 years. He's one of the top-notch mortgage broker in Ontario. Please feel free to call him. Thank you, David. Appreciate your time here tonight.
Thanks a lot for having me. Have a nice night. Take care.
All right.
Bye.
Now we're going to talk about our market, what is happening in the Toronto real estate market. And to enlighten us, we're going to bring my sister, Randy Goodman.
Thank you, Navtaj. Thank you
She's
so
number
much.
one best-selling international author of all time. She is one of the top-notch real estate broker in Canada. I can say that. It's all yours, Randy.
Thank you so much. Thank you for having me here. And I just wanted to make a side note that it was Jerry's birthday a few days ago. So happy birthday, Jerry.
Happy birthday, Jerry. Hope he is.
Okay, so is this a good time to buy power of sale properties? Well, purchasing a power of sale property in Ontario can be an attractive opportunity, but it's essential to weigh the current market conditions and inherent risks. What are power of sale properties, first of all? Properties sold by lenders when borrowers default on their mortgage. Allows lenders to recover debt without court proceedings. Common in Ontario real estate market. Current market conditions. Declining home sales and prices. In March 2025, the GTA experienced a 2.4% month-over-month decline in home sales, following a significant 28.5% drop in February. The home price index also decreased by 1.4% to just over $1 million. And these trends are attributed to economic uncertainties, including recent trade tensions and the upcoming federal election. Spring market surge. Despite recent declines, experts anticipate a resurgence in the real estate market during the spring session. Stabilizing interest rates and pent-up buyer demand are expected to increase market activity. Well, I hope so. Okay. Pros and potential benefits of buying power of sale properties. Potential for lower prices. These properties may be priced below market value to facilitate a quick sale. Quicker possession. Lenders are motivated to sell promptly, potentially allowing faster property acquisition, faster closing timelines. Clear title. The power of sale process typically ensures the property title is free from liens or encumbrances. May be less emotional competition compared to regular sales. Cons and risks. So, as is condition. Properties are sold without warranties, and buyers assume responsibility for any repairs or issues, which could be significant. Limited information. Sellers may lack detailed knowledge about the property's condition or history. Competitive market. Attractive pricing can lead to bidding wars, potentially driving up the final sale price. Legal complexities. The process involves legal intricacies necessitating expert guidance and potential for redemption. Original homeowners may have a period to reclaim their property, which could disrupt the purchase. Additional considerations. Market dynamics. In high demand areas like the GTA, power of sale properties often sell close to market value, reducing the likelihood of significant discounts. Due diligence. Conduct through inspections and legal reviews to uncover potential issues. Legal advice. Engage a real estate lawyer experienced in power of sale transactions to navigate the complexities. Review a status certificate, if there is one, and legal history. Confirm all taxes and utility bills are up to date, and understand your rights and responsibilities as a buyer. So here's some more buying tips. Work with an experienced realtor. Hire a real estate lawyer familiar with power of sales. Get pre-approval for financing. Act quickly, but with due diligence. Budget for repairs and unexpected costs. While the prospect of acquiring a power of sale property in Ontario may seem appealing, especially with potential market rebounds on the horizon, it's crucial to approach such investments with caution. The combination of current market volatility and the specific risks associated with power of sale transactions necessitates careful consideration and professional guidance. So work with somebody that you trust and is familiar with the process. And that's what I've got for you. Thank you.
Thank you, Randy. This is another person you want to talk to if you want to buy a piece of property, power of sale. A lot of the Canadian call it foreclosure, which we have different systems, two different systems in Canada. When somebody defaults on the mortgage payments, that is power of sale or foreclosure. When you default on any other financial obligations, then your property can be taken over by the civil enforcement. The property will be auctioned off in the courts. So that's a different process altogether. And if you don't pay the property taxes, the city will sell the property as a tax lien property. So just thought I should share with you. Thank you, Randy. Appreciate it. Now we are tenants. So this is something majority of Canadians are facing, and they are saying, okay, you know what? I got a bad tenant. Why won't you get a bad tenant? Reason being simple. You don't have enough education, being a landlord tenancy act. You're a speculator. You just invested $1 million knowing nothing about how to become a good landlord. What is the vetting process? What does it need? Why don't you hire professional people, even realtors? And these things are important, in that your landlord going to send you a notice, then you're going to apply for it. This goes back and forth. And sometimes you will see people say, okay, I didn't get rent for 2.5 years. Whoa. And they'd like to blame the tenant, but don't want to they don't want to own it. Hey, I didn't know how to do it. So anytime you're going to do something, make sure you have a entourage of professionals with a lot of experience, and that matters. All right. We're going to bring our legal expert, Jyoti Chaudhary. She is the lawyer. She has degrees or education from Canada, from UK, and India. Jyoti, it's all yours, my friend.
Thank you, Navtat. As always, I really appreciate the introduction you give. Today, I'm going to be talking about landlords and tenants. Well, everybody is in one situation or the other. Either you're a landlord or you're a tenant. If unfortunately you've had your house taken away by power of sale, you're going to be a tenant. On the other side, if you are an investor buying a power of sale property, you will want to rent it out. So people are in one situation or the other, and that's why it's important to talk about the Landlord Tenant Board and the Residential Tenancies Act. So I'm going to tell you about the Residential Tenancies Act. The purpose of this act is to provide protection for residential tenants from unlawful rent increases and unlawful evictions, and to establish a framework for the regulation of residential rents to balance the rights and responsibilities of residential landlords and tenants, and to provide for the adjudication of disputes and for other processes to informally resolve disputes. So this relationship of landlord and tenant is a very dicey one. If you're a landlord, you may have grievances against the tenant, and if you're a tenant, you will have grievances against the landlord. So this act, Residential Tenancies Act, is there to protect the interests of both. So if you're a tenant, then it protects you from unlawful rent increases. It protects you from unlawful evictions, and it provides an informal dispute resolution process. Now, the other body is the Landlord and Tenant Board. It is there to resolve a dispute as per the Residential Tenancies Act. And if there's a dispute with a landlord or a tenant, then you can go to the Landlord Tenant Board. And if, as a landlord, you want your tenant evicted, then you can file for an eviction order. There are various forms available on the website of the Landlord Tenant Board, which are both for the benefit of landlords and separate forms for the benefit of tenants. And there are a number of forms which relate to different scenarios related to the tenancy. From a tenant's perspective, eviction is a stressful and potential devastating experience with the possibility of losing housing and facing financial crisis. Tenants have rights, including the right to a hearing and to explain why they shouldn't be evicted, and they can seek legal assistance to fight the eviction. So if you are in the process of being evicted, you still have the right to a hearing and to explain your case to the landlord tenant board member. Now, if you're a landlord, then you can file for an eviction order, and you have to understand as a landlord that you cannot evict a tenant without a valid reason and must follow a specific process, including providing written notice using the proper form from the landlord and tenant board. So what are the reasons on the basis of which a landlord can evict a tenant? The first reason is non-payment of rent. If rent is consistently late, the landlord can pursue eviction. So what are the tenant's rights and defenses if he has been served with an eviction order? He has the right to a hearing. Tenant has the right to a hearing before the landlord-tenant board to explain the case and why he or they should not be evicted. The tenant can also seek help from the landlord-tenant board and ask for a dispute resolution process relating to evictions. The other right that the tenant has is even with a notice, a tenant doesn't have to move out immediately. You have the notice of eviction, but you don't have to move out immediately if you're a tenant. You have the right to a hearing before the LTB, where you can explain your situation and why you shouldn't be evicted. The LTB's role is an independent tribunal that resolves residential tenancy disputes, including evictions. Now, if the eviction order has already been issued by the LTB, then the sheriff comes into the picture, and only the sheriff can physically evict a tenant, and that can only happen after the LTB issues an eviction order. Now, this is very serious for the tenant and also for the landlord, because the landlord is also suffering if the tenant hasn't paid for a number of months and he has his mortgage to pay. So this is a very grave scenario for both the landlord and the tenant. Now, apart from payment of rent, there are other reasons on the basis of which a landlord can apply to the landlord tenant board for an eviction order. The reasons are damage to the property. So if a tenant causes significant damage to the rental unit, again, the landlord may seek eviction. Similarly, if a tenant engages in illegal activities on the property, the landlord may seek eviction. So apart from rent, non-payment of rent or late payment of rent, you have damage to the property, you have illegal activities. These are the grounds on which the tenant can be evicted. Or if these are not the scenarios that are there in that particular case, the landlord may need the unit for his own use. And in those cases, the landlord could evict a tenant if they genuinely intend to occupy the unit themselves or for a family member. So this is also a provision that is available to landlords to have the tenant vacate the property. The last reason when landlords can seek eviction is if they plan to renovate or demolish the property. So if you have a property and you want to renovate it or demolish it and make a new structure, you can ask the tenant to vacate. Of course, there are other things that you have to do apart from asking the tenant to vacate. You have to provide him a suitable or alternate accommodation and things like that. That is a separate matter. But you can ask the tenant to vacate. At the same time, at the hearing, tenants can present evidence and witnesses to support their case at the hearing. And they have the right to legal representation. Tenants can seek legal advice and representation from various organizations or from a lawyer, experienced lawyer. In some cases, the LTB may choose to delay or refuse an eviction order, especially if the tenant is facing hardship or if the landlord's reasons for eviction are questionable. Even if there is an eviction order in place, the tenant has the right to collect his belongings. He must be allowed back into the unit within 72 hours to collect his belongings. So if you're a tenant, you can go to the City of Toronto website, which offers resources and information on preventing evictions. And there is also the Toronto Rent Bank, and that provides grants to eligible Toronto residents who are behind on the rent. So hopefully you are able to access some of these resources or take the advice of an experienced lawyer to resolve these disputes and to fight your eviction order. That's what, I mean, there's so much more to be said on this topic, but for now, I think this should be good enough.
All right. Thank you, Jyoti, so much. Once again,
You're
Jyoti
welcome.
Chaudhary, she's a real estate lawyer and she has practiced, she got her education from India, UK, and Canada, and she has been helping all of our fellow Canadian investors here. Please get in touch. All right. We're going to move forward to the next thing, which we don't want to talk about, is the taxes. 43% of your income are taken away from you in form of taxes. Yike, yike, yike. So, well, painful, but truthful. So, but before we go into this, so you work hard, you got taxed, you spend your tax, you own a home, you tax, you die, you tax again, and your tax, the system is broken. And now, what do we need to do? This the day we born, the day to die, we're gonna be dealing with it. So to enlighten on the Canadian taxes, we're gonna bring our expert. Our expert is Jerry Hogenhout. Oh boy. He's the only Canadian licensed in 5 different and separate regulated investment marketplaces. He is also a real estate investor, just like yourself. He deals with stock bonds, mutual funds, private funds, mortgages, and also he have a degree. Also, he's a CPA. He does taxes. So it's a tax time. Are we ready for it? Jerry, are you here?
I'm here. Thank you very much.
All right,
Good to
sir.
see everybody.
All right.
Can
So
you
you
hear
have to speak a little
me now?
louder.
Sorry, can you hear me?
Yeah, we can hear you. If you can speak a little louder, that'll be good. I know you're driving.
Yeah, I am driving, so I got to be careful because not only are we taxed to death, I got to make sure I don't get ticket here. So
All right.
I am hands free. I'm hands free.
Okay, perfect.
Actually, before I start, can I ask Yodi a question? She was talking about landlord tenant board and everything.
Sure.
I would like to ask a question because I have a client who wants to evict the tenant for personal use. The landlord wants to use it for personal use, but not his principal residence. Is that a problem if the landlord is trying to evict a tenant for personal use, but it's not their principal residence that they'll be using it for?
Well, he has to prove that it is for personal use. It could be for him or a family member. but somebody has to be physically living there, either from
Yep.
his family or
Yep.
from his relatives. In that case, he can give, I think it's an N12 notice to the tenant
Yep.
to move out so that he or his family member can move in.
Okay, so you don't see a problem if let's just keep it simple. Say they have two residences, which is the case here. So this person has their principal residence somewhere else, but this property that they want to use for personal use is an hour and a half away, and they want to use it when they're in that town. Do you see a problem with that? Or?
No, so long as they're living there, it doesn't have to be a principal residence. They can use it
Right.
for whatever purpose, but somebody has to live there from the family
Yeah.
or the relatives. I don't think there is a
Okay.
requirement for it to be a principal residence.
Yeah, that's kind of what I thought. So I appreciate you sharing your thoughts on that. So
No
anyway,
problem.
let's talk taxes. So I think we want to, given all the tariff stuff, let's put a tariff slant on this tax. And actually, there's David and Jonathan both stole a bit of my thunder here. Jonathan made some very interesting comments because when you look at the whole tariff thing and taxes, the housing market, of course, tariffs are going to, raise the price of everything. And David made an interesting point, and I've seen it firsthand with a lot of my clients. There's a perception that everything is going to go up. So a lot of these clients just raise their prices, whether it relates to the cost of their product or not. And I saw that a lot recently when our last little increase in price a number of years ago. Some of my clients were making more money than they ever did simply because they raised the price of their goods, just because everything's going up. So there's certainly a perception that these tariffs will raise the price of housing. But as far as building a house, you do have to look at how much of that material is coming from the States and how much of that material to build a house can be accessed in Canada. And Jonathan made an interesting point that certainly economies of scale, the U.S. has more efficiencies in a lot of cases. The prices really are more reasonable than they can be found in Canada. So, you just picture a house and you go, okay, there's somebody's building a house. How much of those materials are sourced from Canada? How much is sourced from the U.S.? Hypothetically, if all of the materials are sourced from Canada, should the price of that house cost more? And in theory, no. But as I told you earlier, many of the capitalist society, if business people can raise prices, they will raise prices. So that's a concern. So that's just an interesting thing as we see what the price, what the tariffs will do to the price of everything. One good thing, there's two good things actually. I want to put a positive spin on it. One is the interprovincial barriers are being brought down. I don't even know why we ever had interprovincial barriers. Why would we restrict our movement of Canadian goods across Canada? And it's silly from the beginning. So that's a good news that these provincial barriers are getting brought down, which may bring some more efficiencies into certainly housing costs. Maybe this allows some of these companies to be more efficient if they're going to be doing more business with Canadian builders. The thing I look at, because I'm a real estate investor, I'm not as interested in new builds. I'm more, my whole real estate philosophy is buying cash flow. So I'm, my target market is multi-unit buildings, and what drives those multi-unit buildings is residential rent. And with everything going up, sorry to say this to the tenant, the renters out there, but your rents are going to go up. So that's what I see. I see the sustainable revenue model of residential rent will continue to be strong, not just for the tariffs, but just for all the other reasons that they're not building enough houses, they're still bringing people into Canada, people need to rent, the expense of buying a house. There's so many reasons why the rental market is strong. And the tariffs, to me, just give it more fuel to increase the rental revenue stream that certainly multi-unit buildings bring. So that, to me, from a real estate investment point of view, I hate to say it's good news because tariffs aren't good news, but you try to get positive out of it. So that's one thing. What else was I going to do? Something else I was going to talk about. And I forget. There seems to be a lot of consideration for HST. I think both parties that are running are giving some HST relief to people, first-time home buyers. Oh, I know the point I wanted to make was Alberta. I've always been bullish in Alberta. I own apartment buildings in Alberta. Alberta is probably the most landlord-friendly province in Canada. And depending how this election goes, if Carney gets in, if the Liberals get back in, I think there's going to be discussion in Alberta about, okay, Mr. Trump, what can you do for us? I don't think Alberta is going to leave Canada, but something is going to happen that is going to make Alberta even more attractive for people to move to. So from a demand point of view, if Carney wins, I see even a stronger demand of people going to Alberta. I think most people are impressed with the Premier, Danielle Smith, with her handling of this affair and how protective she is of Alberta. I've got a lot of clients to Alberta. So that I watch with interest whether this election has anything to do with the appeal to Alberta. Anyway, so those are my comments. And Randy, I do want to thank you. Yes, it was my birthday, so thank you for recognizing that. I feel older, and I am older. I don't know what wiser, but I am. So I thank you for recognizing that. I appreciate it. That's what I got tonight for you now.
All right. Thank you. Once again, happy birthday, my friend. All right. We're going to move forward. And these are about the taxes and what's happening in the economy. There are massive profits to be made. Those who are doing fixing and flipping, average home they bought for 1.2, selling for 3 million after 13 weeks of renovations. Is a great model, no matter which way you like it. It is there. Now, here is something about real estate, what is happening. Those who want to borrow money, or people say, I want to buy fix a house, but they don't have enough down payment or whatever. You can buy a house in Toronto or Ontario with 20,000 down, 10,000 down in Alberta. The rest of the thing can be financed, and these are the rates. These rates are called more or less hard money lenders. The risk seems to be a bit higher, which they are, but you're only borrowing for a short-term basis. Just that I just shared with you because every time people ask me, hey, what are the rates are? These are more or less the rates, by the way. Moving forward with this one, Canadians, they can take a lot of pain, and they are paying a lot more money, and they're compromising everything in their life to keep the house going and hoping that they could make money when the house price goes up. So again, this is a situation all across Canada. People are suffering, but they are cutting corners. It's amazing. About 65% of Canadian homeowners are struggling actually, and they are cutting in the groceries, the cars, everything you can think of it though. So if you want to pay off the mortgage earlier, this is something else I just thought I should share with you. If you got a 500,000 mortgage, I assuming at 5% interest rate, 30-year amortization, your payments are approximately $2,684. Now you could have prepayment penalties, and you just have to be careful. And all you have to do is a couple of things. I'll give you a couple of scenarios and think whatever work for you. If you make no extra payment, it'll cost about $466,000 interest payments only, and you can pay off in 30 years. If you want to make one extra payment toward the principal, your house will be paid off in 24 years, which can save you about $94,000. You want to make extra two payments, or I'll save you about 172,000. We are able to make extra three payments a year. The savings are about 224,000. A lot of Canadians are getting into it. This is one of the largest debt you're ever going to have. And the worst part is you have to pay this debt after paying the taxes. Now, there are certain strategies available for you, but again, for you to pay off a house, you have to earn approximately 966,000, and by the time if you need to pay it off, you have to earn about $1.8 million before taxes. So a lot of people don't realize it, that here's a question for all of you. And if you would like to reply, you can reply it. And here's a question for you. Would you like to buy a rental property first or principal residence first? I have my opinion based upon as an investment coach, and you might have opinion I need to have a home first because all the money, all the appreciation is tax free. Now we can handle both. There's different strategy to it. So most of the investors who are not aware of it, if you own a principal residence, you also have rental property. There are strategies which can be implemented, and these strategies are so powerful that it's not funny. I'm going to be talking about quickly for you those who are interested in buying a surplus property directly by bidding on it. The property was appraised 175. You can contact directly the city. This is how the surplus properties are sold in Canada. Those who want to take a quick picture of it, if you didn't take a picture of it, send me a text message. I'll be happy to send you the picture of the slide so that how you buy property is 43% discount, black and white, public knowledge. And that's what you come here for. All right, moving forward with this thing, Edmonton. Edmonton intend to approve the building permit in 1 day, or some of them through IA or AI. And in Toronto, it takes about 2 years, and from Edmonton, it takes about 3 months, in case you are aware of it. So some of these things happening, and most of us not realizing it, that there is a higher crime rate in Vancouver and Toronto compared to New York and LA. Facts speak much, much louder. People cannot go over there whatever they want. And by the way, London, Ontario is not behind either. Those who are from London or from Windsor or even from Thunder Bay should be aware these are the numbers. So can you do something great? Can you make your home mortgage payment, your principal residence mortgage tax deductible? The answer is yes. And the strategy one has to use called cash damming. It has to be done very carefully, and you cannot fool around with it. It has to be done with the help of mortgage broker, your accountant, and your lawyer, because it is something where if you own a average house or piece of property in Canada, you could be saving tremendous amount of money. You'll be paying your both properties off 7 to 10 years at a time, and possibly saving somewhere from $200,000 to $400,000 in taxes. So this is very powerful strategies, and just thought I should share with you tonight. And before we go any further, forget about this one. I mentioned to you, rentals are going down, by the way, and there are about 10,000 properties available in GTA alone for rental. The rental market is tipping, the rents are coming down, all kind of stuff is happening. This is another piece of property in Markham at Kennedy and 14th. It's under construction. This 4-story, 15-unit residential building, which is in between, is up in market for sale under power sale or foreclosure. They're asking for $5.9 million. Winnipeg became Canada's most dangerous city, by the way. Calgary has the highest violent crime, by the way, and the property crime is highest in Vancouver. And Winnipeg is considered, again, one of the most dangerous cities. Those who are interested, because there's so much inventory available, there is I have video called Stinky Bits or Stink Bits, which is low ball figures and how you make it. And this will be a good time because a lot of sellers need to get rid of it. Most of the sellers are speculators and they want to make a fast buck, and they don't mind losing because they are used to it because they invest in the stock market and this is the game for them. Reconstruction condo is a nightmare in Vancouver and Toronto. One of the worst time ever. We won't go much to it. There are a lot of realtors. They're offering some cash back. They're offering their commission, half the commission back to you. Just be careful who are you dealing with. And again, that's your personal decision. We will not commit much on it. Rents dipped by quite a bit compared to 2024. But if you look at it from last year, the rents are up by 24% if you look at the price from 2020. So there's two different ways of looking at the same thing, different perspective altogether. Those who are familiar with it, we offer masterclass how to buy deeply discounted real estate. The next class is coming on April 20th on Sunday from 2 to 4 p.m. This is teach you how to buy deeply discounted real estate, bank foreclosures, tax liens, virtual wholesaling, and a lot of bankruptcy deals. If you're interested in it, you can text your name on WhatsApp at 416-409-7300. And we want to thank you so much for your time today. We promise that we finish the meeting in an hour. It is 8 o'clock. Those who came in, we want to sincerely thank you. The next meeting will be on May 13th. And please bring your friends. If you've got any questions, please feel free to send to us. And once again, thank you very much. Take care and see you on May 13th.
Thanks, everybody. Good night.
Good night.
Thank you.
Take care of everyone.
Thank you, everybody. Thanks, Jonathan.
Thank you. Good night.
Thank you, everybody. Good night.
Good night.
Bye.